So unfortunately for Hat, they had a flash flood, swept through their warehouse, and really destroyed a lot of inventory. Now, ultimately, we need to figure out how much inventory was lost in the flood. So they gave us a bunch of information here. And basically what we need to understand is that we can roll forward the company's inventory balance from January 1 to May 1 to figure out how much inventory they had in the warehouse before the flood. And then they tell us that inventory not damaged by the flood was $30,000, right? So then once we have that, we can take the difference and that will tell us the amount of inventory that was lost in the flood. So what we can do is use the base or the inventory roll forward method to figure out what ending inventory was on May 1st. So as you can see in step one, well, we'll start with beginning inventory, which is $35,000. Then we'll add in purchases of inventory from January 1st to May 1st of $200,000. Now that gives us cost of goods available for sale of $235,000. Now in order to arrive at ending inventory, we would subtract cost of goods sold, but they don't explicitly tell us that in the question. But what they do give us is the amount of sales, and they tell us the gross profit percentage on those sales. Well, if gross profit's 40% of sales, that means that cost of goods sold represents 60% of sales, right? So all we can do is take sales of $250,000 multiplied by 60%, and that tells us cost of goods sold from January 1st to May 1st was $150,000. So subtract $150,000, and that tells us right before the flood, ending inventory was $85,000. Now, unfortunately, that huge flood comes through on May 1st and wipes out a bunch of inventory for Hat, right? Really unfortunate. Well, in step two, we can calculate how much inventory was lost in that flood. So we just finished up calculating how much ending inventory they had before the flood, which was 85,000, right? And then the question tells us the inventory not damaged by the flood. So basically, after the flood came through, they went out and said, this is good, this is bad. What we have left is $30,000, right? Well, if we subtract $30,000, that tells us the inventory lost in the flood was $55,000. So that's the correct answer for this question. Now, honestly, what made this question easy was using the base method, which is also referred to as the inventory roll forward, right? We could figure out what ending inventory was fairly simply, and then once we had that, it really wasn't that hard to calculate the amount of inventory lost in the flood. So make sure you know how to use the base or the inventory roll forward method. It's going to save you time and time again.